I am going to start question number 27, which is decision making number 16. This decision making talks of preventive maintenance versus breakdown maintenance in case of a manufacturing operation. Preventive maintenance versus breakdown maintenance. So, we must understand the meaning of the words preventive maintenance and breakdown maintenance. You already know each factory operation involves lakhs of hours of machine hour being used for different production uses. In order to produce the goods, there are sometimes breakage of machine hour. There may be some machinery which disrupts its operation, where it breaks down in the manufacturing process. So, this type of breakdown in the entire operating process is called breakdown maintenance. So, machine hour lost, production is stopped. This has to be compared with a planning for this breakdown through preventive maintenance. So, preventive maintenance is planning ahead how many ways we have to tackle the breakdown maintenance if it comes, so that our production cycle might be slowed but it is not stopped. So, with this intention, we start making question number 27, which is decision making number 16. So, this question says, let us understand the question. The question says there is a continuous manufacturing process involving an output of 6 tons per hour valued at rupees 70 per ton. The process wage cost is rupees 60 per hour, raw material is rupees 35 per ton, regular maintenance works out to be rupees 750 per week. The company is experiencing breakdown due to mechanical reason, averaging 25 hours a week, costing rupees 7500 to repair. The management feels this breakdown can be reduced or eliminated if additional maintenance is taken up. So, this additional maintenance has been expressed in terms of breakdown hours calculated as maintenance cost and repair cost for 0 hour, 5 hour, 10 hour, 15 hour, 20 hour and 25 hour. Process labor during stoppage can be used elsewhere up to 10 hours per week. So, what is the requirement of the question? Number 1, make a tabular representation to tell optimum amount of maintenance to be undertaken in each week. Number 2, what is the additional revenue that will result from the optimal level compared with the present situation. So, we are going to solve the first part, where we are making comparative cost of repair and maintenance to find optimum amount of maintenance each week. So, let us do the calculation in the tabular shape with me. So, statement of comparative cost of repair to ascertain optimum amount of maintenance each week. So, breakdown hour is given, in terms of each week. So 0 hour, 5 hour, 10 hour, 15 hour, 20 hour and 25 hour. These details are provided in terms of rupees. So the details maintenance cost given in the question in the form of table 23,000, 13,000, 6,500, 3,000, 1,500 and 750 rupees. So what you notice, as the number of hour increases, the maintenance cost decreases. So it's a inverse ratio. However, the repair cost is a proportional relation where it increases. How? If you see in the table, it was 0, 2,500, 3,000, 5,000, 6,500 and 7,500. So maintenance cost is decreasing as hour is increasing, while repair cost is increasing as hour is increasing. So they have opposite nature. So what is the total cost? If you add them, 23,000, 15,500, 9,500, 8,000, 8,000, 8,250, right? Now cost of idle time. The question says process labor during stoppage can be used elsewhere up to 10 hours per week. So anything more than 10 hours will have a cost. So breakdown hours minus 10 multiplied at rate of rupees 60. So this is dash dash, why dash or nil? You better you write nil because it is less than 10 hour. So here it is also nil, but from here if you see 5 hour at the rate of rupees 60, 300, 600 and 900. So you need to add them. 23,000, the total cost is 23,000, 15,500, 9,500, 8,300, 8,600 and 9,150. So this is the total cost which comes. So if you compare, you notice at 15 hour the total cost is minimum. So what is the decision? The optimum amount of maintenance for 15 hours of breakdown per week is desirable situation. So this is the situation, first part of the question. The second part of the question says that what is the additional revenue you get from the optimal level in comparison to the present position. So you are making a statement of additional revenue. So what is the extra you get? So value of additional output. So what is the additional output? You save 10 hours, right? 10 hours. You multiply with 6 tons because the question says that it is 6 tons output per hour and this is valued at rupees 70. So when you multiply, it comes at rupees 4200. You have to reduce wages 10 hours at the rate of rupees 60. So this becomes 600. You have to reduce material cost. This is 10 hours saved into 6 tons at the rate of rupees 35, which works out to rupees 2100. Finally, you add saving in maintenance and repairs. This is how much? You are presently at this point and the ideal point is 8300. So how much you save? You save 9150 minus 8300. So you save 850. This gives you additional revenue. Which is 2350. So friend, this is the additional revenue you are likely to get. Let me repeat the solution again. This question talks about preventive maintenance versus breakdown maintenance. So presently you are working at this level. This is your present level. Now with preventive maintenance, you can come to a level where you reach from 25 hours to 15 hours, right? So for this 10 hour of saving, what is the extra money I am getting? The additional revenue. So you notice after adjusting the maintenance and repair cost into total cost, you further add cost of idle time. This idle time only appears after 10 hours. So for first 3 level it is 0. For balance level, if you notice, it is a cost 300, 600, 900. So when you add, you get the least cost at 8300 rupees, which is equivalent to 15 hours. When you make additional revenue computation, you find that the additional revenue after adjusting wages and material and adding the saving in maintenance repair, it comes to rupees 2350. So this is the solution which examiner is expecting. You are required to give a clear presentation of the scenario. So friend, I will move to the next decision, which is decision number 17, and it is the next question number 28. Now we move to another type of decision. This is labor related decisions. This is decision number 17, which is labor related decisions. Each factory has to face turbulent time in form of strikes. So labor strike is a regular phenomena where the factory has to prepare some strategy. It has regular customer order, and in the time of strike it has to plan how many hours will be lost when workers don't go for working and how to compensate this loss by giving some extra time at a higher wage rate to the current workforce. And should we use a third party agency to do the work so that the special orders what we have procured from customers is not lost. So this type of scenario has to be looked, and the senior management has to take a call and compare this with the budgeted volume which they have planned. So this question talks of this scenario, and again this is an exam question which has appeared in one of the old paper of Institute of Chartered Accountancy at the final level in your subject. So Factory Limited had a bad strike in one of its department. By comparing budgeted and actual quantity, the cost of strike has been prepared. It says that sales lost due to strike is 35,000 units, which creates the total revenue loss of a big amount. So this company has the department which produces only one product and keeps no stock. At the end, at the time of strike, there was a temporary decline in demand for the product, and it is estimated the actual sales would in any case be 10,000 units below the budgeted cost. The sales manager says that even if it reaches to this volume of sales, he would have to reduce the price of last 25 units sold at rupees 1. The workers who came in the strike were used in maintenance work usually undertaken by outside contractor for rupees 3,000. The material costing rupees 1,000 has to be specially brought for maintenance work. The budgeted fixed overhead rate is based solely on fixed cost, which does not affect any department. Further, the company works 5 days a week from Monday to Friday. It was agreed as a part of strike settlement that 10,000 units lost would be compensated by working on Saturdays at a special wage rate which would add 25% to the budgeted unit labor cost. Taking all this information into consideration, the managing director of the company wants to know what would be the cost of strike. So this question talks about cost of strike, and it also talks in case of settlement how this is going to affect the business. So friend, let's work for managing director of the company together to evaluate the cost of strike. So we start with the working note. Number 1, sales lost is 35,000 units minus 10,000 units, right? So you lose 25,000 units. The contribution per unit is 1 minus 0.75 rupees. So how we have obtained this 0.75? In fact, it is 0.25 in shape of material and 0.5 in shape of labor. This can be obtained by dividing rupees 8,750 by 35,000 units as given in the statement of the question, and the wages saved can be obtained by dividing rupees 17,500 with 35,000 units, right? So this has come from 8,750 by 35,000 units, and this has come by 17,500 divided by 35,000. So this is how the figures has been arrived, right friend? So contribution per unit you say is 0.25. So total contribution lost when you multiply the two figure, you get rupees 6,000 250. This is first part of the working note. The second part says wages paid during strike. This is rupees 1500 because this much you have paid to supervisory staff and workers in union. Then you have material brought for maintenance. This is rupees 1000. You also have savings by company as given in the calculation sheet as no payment is done to outside contractor. This is rupees 3000. So you make a net savings of how much? Rupees 500. How? This 3000 when you adjust with 1000 and 1500. So this is the cost, this is a cost and this is a revenue. So 3000 is a revenue because you save, and this you compare with the material which is a cost of 1000 and rupees 1500 you paid for the wages. So this is the net saving you make. Third point is about budgeted fixed overhead. So budgeted fixed overhead does not affect anyone. It is irrelevant. Does not affect strike. Why? This is already a cost which has been incurred. The fourth point talks about Saturday working. So the question says that if 10,000 units are produced on Saturdays, there will be 25% extra labor cost. That is, the revised cost will be the revised labor cost on Saturdays is 25% off 50 paise. This we are talking per unit, or 12.50 paise per unit, right? So your contribution per unit is rupees 0.250 less extra labor cost for Saturday. You are incurring 0.125 if you look it in that term. So the revised per unit contribution will be rupees 0.25 for 10,000 units. Contribution is rupees 1250. right? So, we reach to the last part of the question, which is the main solution. We have done 5 working note. Now we put them in the shape of a statement, which will be the cost of strike. So I am going to rub this sheet and give the final answer to you. So friend, before rubbing, let me revise what I have done. I have found how many units of sales has been lost. So 10,000 units has been reduced from 35,000 units. So it is 25,000 units. Per unit contribution was 0.25, because from rupees 1 I have reduced 0.25 for material, 0.5 for labor. This is for labor, this is for material. So for 35,000 units I have got them at 0.25 and 0.5. So total contribution lost is, when I have multiplied 0.25 with 25,000 units at rupees 6250. Wages paid during the strike is given, material brought from maintenance has been given. So the saving what I have done from outside contractor is 3,000. So net saving I have done is 500 rupees. Budgeted fixed overhead does not affect strike because this cost is already been incurred. It is not affected by strike. Finally, Saturday's working have been calculated, where revised labor cost on Saturdays is 25% more, which means on 50 paise we are applying 25% more, so 12.50 paise per unit. The revised contribution after adjusting this labor cost is 0.125. For 10,000 units it works out to rupees 1250. Now after doing these 5 working note, I am starting to create the final cost of strike. So friend, we have reached to the final destination. We have to prepare cost of strike. So a statement of cost of strike. Here loss of contribution, this is in terms of rupees 6250. How? We have done on working note number 1, right? Next we have less contribution as per working note number 4, 1250, add savings in wages. This is working note number 2. So net cost of strike, if you adjust, is 4,500 rupees. So this is the net cost of strike which management must know, and this is how the businesses resolve the thing before the strike take place. So friend, we have done question number 28. Now we move to question number 29. So friends, we have done one type of decisions which was labor related. Now we are willing to think whether a company should go for automation, whether it must use high-tech equipment to produce, which increases the efficiency. There we have to compare efficiency with respect to output. Here we are trying to automate the process, which means dependency on human will be reduced. So this type of scenario is the next decision making, which is decision number 18. Question 29, and this deals with automation. In factories, right? In simple word, this is, you can say, whether to buy new automated machine or not. This is the decision we are going to see. So again, contribution is the basis for the decision making. So let's read this question. This has been a old Institute of Chartered Accountant exam paper asked few years back. So let's check your concepts around this particular question. So the question says, the output details of manufacturing department of high-tech industries is provided. So it says average output per week is 48,000 units from 160 employees. Saleable output value is rupees 6 lakh and contribution made by output towards fixed expense and profit is rupees 2 lakh 40,000. The board of director plans to introduce more automation in department at a capital cost of rupees 1 lakh 60,000. The effect of this will be reduce the number of employee to 120. So from 160 it will create 40 employees to leave the job. So it will be having 120 employees, but to increase the output per individual employee by 60%. To provide the necessary incentive to achieve this, board intend to offer 1% increase in piece work rate of rupee 1 per article for every 2% increase in average individual output achieved. So very important line. Let's read it again. This says it offers incentive. What? 1% increase in piece work rate of 1 rupee per article for every 2% increase in average individual output achieved. So if you increase output 2%, you get 1% extra on piece rate basis. If you increase 20%, you get 10% extra on piece basis. Now, it will also decrease the selling price by 4%. So, the question is number 1, find extra weekly contribution from proposed change and evaluate the worth of the project. So, this is the question we are going to solve together, friends. Again, we will start with working note. So, friend, working note is the important part of the solution. You are marked. So, working note should be either a starting point or the end point of the solution. So, let's do the solution with me regarding evaluating this proposal, which is the automation decision by high-tech industries. So, working note number 1, present output per employee. So, you have 48,000 units produced per week. You have 160 employees. So, you are having 300 units produced per week, right? Now, the proposed future output. So, what does it say? You have to increase by 60% of the present output. This means 60% rise on 300 units plus existing 300 units. So how much? This is 180 and this is 300. So the output which will come will be 480 units. Right? Now, number of employees will be reduced to 120. So, total output, which is revised output, will be 480 into 120, which is 57,600 units. Right, friend? Now, the second working note, very, very important. This is for present and this is for proposed. This talks about the piece work rate under A variety, piece work rate. So it is 1 rupees. Proposed it will become 130. Right? The second part is about selling price. This is 1250. Here it says 4% reduction. So 1250 minus 4 by 100 of 1250, which works out to rupees 12. The third part, very, very important and crucial part, present marginal cost excluding wages per unit. So, what is this? Very, very important point. Here you have to take present sale value and reduce it by contribution towards fixed cost and profit. Further, you have to reduce present wages. And divide by present output in units. So what you have to do? You have to write present sale value, which is given here 6 lakhs. Contribution toward fixed cost, and reduce the present wages, which is 48,000. What is the present output? The present output is so here we were calculating the present marginal cost excluding wages per unit. So numerator is with you. In the denominator you have to write 48,000 units, because this is the weekly production. This is going to give me per unit rupees 650. So friend, now we are going to make the final presentation where we are going to evaluate the project and give information about extra weekly contribution from automation. So I am going to rub this page. So we are going to make the final presentation. This is going to let me know statement of extra weekly contribution from automation, right? So, what is my sales? We have our working note number 1. This is 57,600 rupees. Now, sales value, above was sales units, right? The sales value is 57,600 units multiplied with rupees 12. Why? Because there was 4% decline in the selling price. You can write it here also, not an issue. So this becomes 6,91,200 less marginal cost, excluding wages, this is 57.60 into rupees 6.50, which we have calculated in the working note. So this is my working note number 3. This works out 3,74,400. Further, you have to reduce wages. This is 57,600 into rupees 130, right? This is the calculation. This was working note number 2A and this was working note number 2B. So this works out 74,880. So your marginal contribution is 2,41,920. So what you have done? From this figure you have subtracted the two figure and this is the result what you have gone. Less present contribution. You have 2,40,000. So extra weekly contribution is favorable, 1,920. Now payback period. This you wish to know the worth of the project. This is going to be rupees 1,60,000 and you divide it by rupees 1,920. Sorry. So this works out to be 83.33 weeks. This is the final result. If you want to get the amount of rupees 1,60,000 which you have given in automation, you will recover it in 83.33 weeks. The extra weekly contribution what you have got is rupees 1,920. So friend, this is very, very important, which has been asked few times in the last few examination. I hope you must have found the solution interesting, inspiring and challenging also. Exam asks sometime small question but very tricky question. So these tricky questions are in form of some quick words. In this question, the word you must have noticed where the trick was in the line where it asked that board intend to offer 1% increase in piece work rate of 1 rupee per article for every 2% increase in average individual output achieved. So if you can read it properly, clearly, then only you can solve the solution correctly. So friend, proper reading of the question is mandatory. It's not important that how many questions you read and write in the exam. What is important? Reading correctly with proper understanding of the sense is very relevant. Now I will proceed to the next decision making, which will be decision making number 19, and the question will be question number 30. Friends, before I proceed to the next question, I want to draw attention to the use of calculator in the examination. Friends, you know calculator simplifies the calculation which are very long given in the exam with less time to solve, and you are always racing to finish the question in 3 hours. So friend, what is the importance of calculator? Can I reduce the use of calculator? Yes, you can take units in terms of thousands, lakhs, crores as given in the question, so that every time when you do the calculation of the internal aspects, the internal working, that time is reduced. If you are calculating again and again the same figures of thousands and lakhs, you are likely to commit mistake. So my sincere advice is to consider my suggestion, think about it, practice, so that the calculation errors don't happen. Now we move to decision number 19. It talks of decision of new product pricing. So, there may be a scenario when a company produces a given product, it improves and comes with new version, which again is a new product. So, how business decides new product pricing? The new version comes every year or almost after 2-3 years in each product. So, how business does it? This is the decision which we are going to do now. So the question says, X Limited specializes in manufacture of laptops. They have recently developed a new technology and come out with a new variety of laptop. They are confident to sell 8,000 units which they will be making in a year. The capital equipment would require 25 lakh and it will have economic life of 4 years with no salvage value. During each of the first 4 years, the promotional expense in terms of advertisement and other expenses has been provided. The variable cost of producing and selling the units would be rupees 250 per unit. The additional fixed cost to be incurred for this new product will be rupees 75,000 per year. The company's profit goal call for a discounted rate of return of 15% after tax on investment on new product. The income tax rate will be 40%. You can assume straight line method of depreciation to be used in the calculation. Work out an initial selling price which may justify the new product pricing. So friends, we are going to solve this question together. Here we will be using annuity value for 4 years whose value at 15% is 3.0079. This question can come in strategic financial management also, and this can come in advanced management accounting also. So friends, we have noticed in our previous examination question of group 1 coming in group 2 and question of group 2 coming in group 1. So we do this question together. What we are trying to find? We are trying to determine the initial selling price. So determination of initial selling price. This question may be considered for pricing chapter also, but I thought this question to be considered from decision making from holistic purpose, because we have dealt labor decisions, production decision, marketing decisions. So new product pricing is also a thing to be considered here. So let the selling price be X. So the sales value will be rupees 8,000 X. So we are using algebraic method of calculation here. The annual cash cost variable cost for 8,000 units at the rate of rupees 250. This is going to come at rupees 20 lakhs. So 8,000 units, which is likely to be sold in the year, when multiplied with rupees 250 becomes 20 lakhs. Advertisement and other expenses. This is given at rupees 1,50,000. The additional fixed cost for this new product is 75,000. So when you add them together, the total cash cost becomes 22,25,000. The depreciation is 1/4 of 25 lakh. So depreciation per annum is 6,25,000. So total cost is depreciation per annum plus total cash cost. So this has to be reduced from the sale price. So profit for taxation, this will be sale price, which is 8,000x minus 28 lakh, or let's break it the way you have done. This is going to be 6,25,000 plus 22,25,000. So tax at the rate 40% on profit. This is 40% of 8,000x minus 28 lakh 50,000. Right? So, the total annual cash outflow this will be 22 lakh 25,000 plus 40% of 8,000, this becomes 3,200 x, and 40% of 28 lakh 50,000, this becomes 11 lakh 40,000. So, on solution, this can be written at 3,200 x minus 10 lakh, this can be written as 3,200 x minus 10 lakh 85,000. Right? Now, you have to use the discounting factor. So, present value of initial cash flow, better word will be cash outflow, this is equal to present value of cash inflow. Right? So, we are going to solve this equation. So, what is present value of initial cash outflow? 25 lakhs you will be investing. This is equal to how much? This is going to be equal to 4,800 x. So, there was a calculation mistake here. So, I am taking this figure from here to here directly. 4,800 x minus 10 lakh 85,000. This is required to be multiplied with the present value factor 3.0079. So, when you solve the equation, the value of x on solution will come rupees 399 paise 20. So, this is the selling price what you are going to get for the new product which you wish to sell 8,000 unit during the year. So, friend, this was decision number 19. The last decision which we will be doing will be the decision number 20. It will talk of costing of transport based questions, where costing of service sectors will be discussed. We are considering 20 decisions in the discussion. There can be many more, but I believe if we do these 20 decisions, we will be good to face the exam question with confidence. So, I rub this board and go to decision number 20, which is costing of service sector. Right? So, friend, now we move to next decision making, which is decision number 20. This is costing of service sector. This is very important area where in the past they have asked many type of questions. So, we are going to cover 4 questions under this category. One question will talk of bus transportation. Another question will talk of airline transportation. The third question will be on hospital costing, and the fourth question will be on hotel costing. So, hospital, hotel, bus transportation and airline, they are all service sector which is giving service to the consumer. So, we have done this topic earlier in the intermediate level at IPCC. So, friend, we are now going to solve the question on bus transportation. So, how we do this type of question? We segregate fixed cost as standing fixed cost, and we segregate variable cost, and we add these two costs to get the relevant passenger cost per kilometer or travel cost per kilometer. So, let us do a small question, I should say small but a very tricky question to understand this type of transportation. This transportation relates to bus. Right? So, the question says a manufacturing company run its boiler on furnace oil obtained from X oil company and Y oil company, whose depot are situated at 24 and 16 kilometer from factory site. So, let us make a small drawing. This is factory, this is oil, this is oil company, right? So, you have X oil company, you have Y oil company. So, X oil company is situated at 24 kilometer, Y oil company is situated at 16 kilometer, right? Transportation of furnace oil is made by companies' own tank lorries. So, it is the case of a lorry of 8-ton capacity each. So, there is a lorry of 8-ton capacity each, right? Onward trip are made only with full load and lorries run empty. What does this mean? It is a to-fro journey. Onward trips are done only with full load and lorries run empty. So, when the lorry go from here to here, it is loaded from oil company X to factory. But when it returns, it is empty. Likewise here also, when oil company Y sends to factory, it is loaded. But when it returns, it is not loaded. It is empty. The filling time takes an average 40 minutes of X oil company and 30 minutes for Y oil company. So, the filling time is 30 minutes. Here filling time is 40 minutes, right? The empty time in factory is only 40 minutes for each. The average speed of lorry is 24 kilometer per hour. So, lorry speed is 24 kilometer per hour, right? The varying operating cost averages 80 paise per kilometer covered, and fixed charges gives an incidence of rupees 750 per hour of operation. So, the variable cost is at the rate of 80 paise, rupees 0.8 per kilometer, and the fixed charge is rupees 7.5 per hour. So these informations have been provided. You are required to calculate transportation cost per ton. So required is transportation cost per ton. So this is the requirement. So how we proceed? Let's start working with me. So you have a working note. This talks about calculation of variable cost. Distance x and distance y. So one side travel distance in kilometer. This is 24 kilometer and 16 kilometer. So round trip is double. This means it goes and comes 48 and 32, right? So variable cost at the rate of 0.80 per kilometer. This is 48 into 0.8, 32 into 0.8. This is 25 rupees 60 paise and this is 38 rupees 40 paise. Right? Now this is working note number 1. Now working note number 2. This talks of calculation of fixed cost. So again for distance x and distance y, actual running time for round trip 120 minutes and 80 minutes. Filling time and empty time, because whenever a lorry comes, it has to get oil filled and when it reaches to destination, it must empty it. So the time provided is 40 and 40 minutes. Thirty and 40 minutes. So total time is 200 minutes here and here it is 150 minutes, right? Now fixed cost has been given is rupees 750 per hour. So fixed cost at the rate of rupees 750 per hour, this is going to work out rupees 25 and rupees 18.75. Now we come to the final solution. To do the final calculation, I am going to rub this board and we can calculate ton kilometer using this presentation. So after having done two working note, now we come to the final presentation of this question where we are required to find cost per ton kilometer. So statement of cost per ton kilometer. So for distance x and distance y, the capacity is given 8 ton. Here it is 8 ton. Full load is 24 kilometer. Here it is 16 kilometer. This is one way, right? It is going filled with the oil. Now tons kilometer is given at 192 and this is 128. So cost per ton kilometer, this is going to be 38.4 plus 25 divided by 192. This is going to be 25.6 plus 18.75 divided by 128. So what I have done? I have added the variable and fixed cost and divided it by tons kilometer. So cost per ton kilometer is 0.33 and 0.347. So what is the conclusion? Which cost is lower? The decision is the cost which relates to distance x is lower. So the decision will be to choose distance x. So decision is choose distance from x as it is least cost. So this is the solution of question number 31. Here we have dealt with lorry. It can be bus or other mode of transportation. Now we are going to solve question 32 under the same head. It will going to be airline. So friend, we are still on decision number 20, which is very important from exam angle. It talks of decision for the service sector and the second service is airline. It talks of decision in case of airline. This is the specific scenario we are going to talk. This is part of decision of service sector. This question has appeared twice in your ICI examination. It is a long question but very easy question if you read between lines cleverly, smartly and with full focus. So the question says, Modern Airways owns a single jet aircraft and operate between X town and Y town. Flights leave X town on Monday and Thursday and depart from Y town on Wednesday and Saturday. Modern Airways cannot afford any more flight between X town and Y town. Only tourist class seats are available on its flight. So, how to present this information? We can present it like this. We have Modern Airways, right, which is flying, right. So, something of this sort is there for this airline, right. It flies between X town and Y town. So, these are two cities. So, it flies to X town on certain days, which is Monday and Thursday. It flies to Y town on certain days, which is Wednesday and Saturday. So, this is the scenario. Now, the question says the seating capacity per plane is 360. So, the capacity is 360 tourists. Average passenger per flight is 260. The average passenger per flight is 200. Right, and flight per week is 4. So, you have 4 flights per week and flights per year is 208. Average one-way fare is rupees 5,000. The information further provided is variable fuel cost is rupees 1,40,000 per flight. Further, food services to passenger costs rupees 200 per passenger. Commission paid to travel agent on each tickets booked is 8% of fare. Further, fixed annual lease cost to each flight is rupees 5,30,000. The fixed ground charge cost allocated to each flight is rupees 70,000 per flight. The fixed salary to flight crews allocated to each flight is rupees 40,000 per flight. Now, fuel costs are unaffected by actual number of passengers. So, the requirement of the question is to find operating income when it flies between X town to Y town on each one-way flight. So, this is the first requirement which we are working. The second requirement will be, it shows that marketing research indicate that if we lower the average one-way fare to rupees 4,800, the passengers number will be 212. Should the Modern Airway lower its fare? And the third part is Z Tours and Travel. A tour operator comes to charter facility of the aircraft twice each month. So, they want to charter. For this activity, the work will be to get the tourist from X town to Y town and then back. For that, it is going to offer 184 passenger each year. The terms of charter will be that rupees 7.5 lakh will be paid to the flight crew and ground service. Z will pay fuel cost and Z will pay all food cost. Should this offer be accepted? Is there any non-cost consideration also involved? So this question has appeared twice in the examination. So we need to understand it properly. So let's start solving question by going to the first part, which is statement of operating income of modern airways. So we are going to solve the first part, part A. It is statement of operating income. Of modern airways, right? So what fee you receive as fare? So fare received. So what fare you receive for 200 passengers at the rate of rupees 5,000. So you get 10 lakhs rupees, right? So if you get 10 lakhs rupees, what is the variable cost of the flight? First element which is variable is the commission which you pay to the agents. It is 8%. So 8% of 10 lakh will be how much? 80,000. What about food service? It is at the rate of rupees 200. So this works out 40,000 for 200 passengers. You have fuel cost per flight at rupees 1,40,000. So what you get is the contribution per flight. And this flight is one way. So on subtracting, you get a figure of rupees 7,40,000, right? So you reduce further fixed cost. So what are the fixed cost? Lease cost. You have taken airline on lease. So this lease cost on annual basis. So annually. This works out 5,30,000. You have baggage handling cost. Which is by way of ground service. Further, you have your fixed salary of flight crew. Which works out at rupees 40,000. So operating income per flight is 1 lakh rupee. So this is the first part of the solution, which tells you that the operating income of modern airways in one way flight from X town to Y town is rupees 1 lakh. I hope you must have understood the friend. You must have noticed it is the same calculation what you are doing from sale price you are reducing the variable cost, you get the contribution, from contribution you reduce the fixed cost, you get the operating income. So simple question, easy question if you read the lines very cleverly with full confidence. So friend, now we go to the second part of the question. So we move to the second part of the solution. The question says, should Modern Airways lower its fare? So what is the revised fare? 4800 rupees per flight, and this is going to enhance customer by 12 units. So it will be a 212 customers flying at the rate of rupees 4800. So let's compare. Statement of decision to lower airfare. So this decision has to be taken. So fees received, 212 passengers at the rate of rupee 4800. This is going to give us 10,17,600 less variable cost per flight. One is commission at the rate of 8%. It works out 81,408. So this 8% is basically 8 by 100 of 10,17,600. The new fare you are taking. Then you have food service. This is at the rate of rupees 200 for 212 passenger. This works out 42,400. Fuel cost remains unchanged. You have to bear it. So contribution per flight, it comes out 7,53,792. So friend, what is the decision? Price of flight to be lowered. So you can lower the price. The third part of the solution talks whether to take the facility by Z Tour and Travel. So what is the contribution in option A and in option B? Please compare it. If you see here, if you see what is the first option, the first option is lower fare. Second option is take Z company facility. So this is 7,53,792 and here it is 7,50,000. So which is going to give you more revenue? The first option is going to give you more revenue. So you must use the option accordingly. So financial consideration of Modern Airways to charter its flight to Z and Travel should use accordingly the option which gives more return. So a comparison of this data shows that modern airways will be financially better off by not chartering the flight to Z company. However, the other regards you have to see that the relationship between the two parties is important. Further, modern airway passenger may feel inconvenient when flight is chartered to Z Tour and Travel, and they may go to some other airline, which will be a loss of business. There will also be loss of contribution in chartering plane equivalent to rupees 3792 per flight, and this is the condition which needs to be seen by the senior management of the company. So what we have told, that loss of regular customer need to be seen. Next, because they will go to some other flight arrangement, relationship of parties, the airline and Z has to be seen, and there is a loss of contribution. Of rupees 3792 per flight. That has to be taken care. So these 3 points has to be seen by the senior management. So friend, this question has appeared twice in your examination. Please redo with me and later also see the questions and reflect the requirement of question, because we expect some question on this particular aspect in recent exams to come. So now friend, I will go into another type of service sector pricing. It is going to be again decision 20, and it will deal with question number 33. So friend, let us do another type of question under decision making number 20. This deals with hospital. So a multinational company has hospital. It has 3 wards: general ward, cottage ward and deluxe ward. So you are required to compute rent to be charged for each bed day for different type of wards on the basis of certain information. So the information given in the question are following. It says that this company has hired a building at the rent of rupees 10,000 per month with 5% of takings. The number of bed for each type for general is 100, cottage is 50, deluxe is 30. The rent of cottage which has been decided was fixed 2.5 times of the general ward, and deluxe ward beds cost twice as of cottage ward. So if you compare, the general is, if it is 1, the cottage is 2.5, and if you talk of deluxe, it is double of that, that is 5 times. The occupancy in the ward is given. General ward is 100% full, cottage ward is 80% and deluxe ward is 60% full. Now, if there is a situation when you have more patient, in that case extra beds were hired at the charge of rupees 20 per bed, and the total higher charges for extra beds were rupees 12,000. So this is the situation in the hospital. Also you have been provided more information that one heart expert comes from outside and he is paid a fees of rupees 15,000 per trip, and he makes 3 trips in the total year. There are other expenses which are incurred in the hospital, which covers salary to supervisor, nurse, ward boys, repair and maintenance, salary of doctor, laundry charge, medicine supplied, cost of oxygen and items like general administration expense and medicines. The question says provide 20% profit on total takings and cover 8% service charge on the rent receipt. It is basically the service tax of 8% on rent receipt. Calculate for 360 days, assuming this is the operating time for a year by the hospital. So we are going to find the rent. So this question, if you analyze, has certain things. So let's make a diagrammatic representation of this question. So the hospital has 3 ward: general, you have cottage ward and deluxe ward, right? So we start working and making the computation. So what is the statement of total cost? In terms of rupees. So you start working, salary you pay to supervisor, nurses and ward boys. How much? 4,25,000. You have to bear cost of repairs and maintenance. It is provided at 90,000 rupees. Salary to doctors are also given, which is, as per the question, is 13,50,000 for the total year. Food supply to patients is rupees 40,000. Laundry charges for the clothes this is provided at 80,500. There are equipment of cost towards that, like cost of oxygen, X-ray, etc., which are borne by patients. So they are 49,500. You have medicines cost also. This is 74,000, right? So these are the costs which are being incurred in the hospital. These costs are there. You have general administration cost, at 63,000. So if you add them together along with building rent, which is at the rate of rupee 10,000 per month, this is 1,20,000. So this total works out at 22,92,000. You have to include 5% on taking. So add 5% of building rent on taking. This means the hospital pays rent in two parts. It pays a fixed sum of 10,000 per month. For a year it is 1,20,000, and it gives 5% on the takings, means 5% based on what it gets finally. So if you see that figure, we have to consider it in our calculation. Besides, you notice, if you calculate cost paid to the heart expert, fees to heart specialist, this is also to be taken. He comes 3 times at the rate of 15,000 per trip. You pay him 45,000 rupees, right? Also you have to take extra beds, higher charges for extra beds. You have to take extra beds, so you have to cover that in rupees 12,000 as provided in the question. So we reach to a point of total cost. So the total cost, if you add it, it becomes 23,49,000 plus 5% on total taking, 5% on total takings. You have to keep 20% profit also. So profit at the rate of 20%, if you add, this becomes 23,49,000 plus 25% of takings. I denote it with the symbol T. The total takings we have got at this much. So this is the total takings, right? So if I solve with the equation, you have to take total taking, assuming x to be the rent per day. How many days you have? You have to convert the information in terms of total takings. So if you solve the equation becomes like this: 1,05,000 multiplied by x. Why x? Because let us assume we are using x for number of the bed. So I write it here. Let x represent the number of beds. So 1,05,000 x, this is equal to 23,49,000 plus 25% of x. This is 1,05,000 into x. So if you solve it, what you get? 78,750 x is equal to 23,49,000, which leads us to the value of x at rupees 29.83. So this is the value of the bed for the hospital. So this is the question which has appeared once in your examination, and I hope this is a small question where examiner was checking how you are calculating the rent to be charged to each bed day for different type of cottages, deluxe wards and general hospital. So this was the question which appeared in the exam. I hope you have understood. Now I am going to do last question on the decision number 20. It is going to be your next question. So, this question number 35 deals with hotels, right? So, friend, we have done till now question on lorry or bus, the first type. Second is the airline type. Third is hospital. And fourth is what we are doing now is the hotel. So, I hope if any question comes on this area, the question will be on either of the four aspects. So, we have covered all the possible aspects where an examiner can check your knowledge. So, this question says, it talks of a hotel which has single room and double room, and this single and double room has occupancy provided its operational cost is also given there, and you are asked to calculate certain information. So, let us see what question says. It says a hotel operates by a company has 180 single rooms and 60 double rooms. The rent of double room is at 160% of the single room. The operational cost is given. So, the operational cost given in the question is in terms of variable cost and fixed cost. The average occupancy in both types of room is expected to be at 85% throughout a year of 365 days. In fixing the room rent, the company desires to maintain a margin of safety of 20%. The hotel has to pay a tax of 20% on total tariff. So, you are required, number 1, to calculate the tariff per day per single room and double room. Number 2, it also wants to understand if it gives one customer at a discount of 10% excluding tax, what increase in occupancy it has to do to other rooms so that to cover the loss arising from discount. So, this is the question where examiner wants to check how you are doing this particular numerical. So, let us do the question with me. So, we will start with working notes. So, first point, you are going to find single and double room occupancy. Right? So, for single room, you have 180 rooms, you multiply for 365 days, assuming 85% occupancy, you have 55,845 rooms available. If you see double room, 60 such rooms are there. For 365 days in a year, covering 85% occupancy, it becomes 18,615. This is the first part of your working note. What we have got? We have got single and double room occupancy. When we have solved for single and double room in terms of 365 days and 85% of occupancy of hotel. So, your total variable cost and total fixed cost can be found together. You have single room, double room, and you have a column for total. So your variable cost total will be, this is going to be for 55,845 room into rupees 300. In this case for single room. For the double room it is 18,615 room into 500. So if you total, this becomes 1 crore 67 lakh 53,500, and this becomes 93,700 500. So if you add them together, this becomes 2 crore 60 lakh 61,000, right? Likewise, the total fixed cost in the same manner will be 55,845 into rupees 500, this 18,615 into rupees 780. So if you add them, you will find 2 crore 79 lakh 22,500, and if you do the multiplication here, you will get 1 crore 45 lakh 19,700. So if this is the case, on addition you get 4 crore 24 lakh 42,200. So this is the figure you are going to get. The third working note is finding the desired revenue for the hotel. So finding desired revenue. The next area, you want margin of safety of 20%. This means the break even point will be 80%. So let's work together. Margin of safety is 20%. This means break even point is 80%, right? So revenue will be how much? If you take this figure, 2 crore 60 lakh 61,000 and add 4 crore 24 lakh 42,200 and divide it by 80%, you will get the revenue, which is going to be 8 crore 56 lakh 29,000 rupees, right? Now you have to compute room rent of a double room per day hotel. So we convert our calculation to find the double room occupancy days. To do this, we are going to do certain calculations. So I will rub this sheet. So we have to do certain calculations. Double room occupancy days. This we have calculated 18,615. Notionally, single room occupancy days, if you want to convert it into single, you have to multiply it by 1.60, as the question says this is the total value. So let's do it here. Add single room occupancy days. This is 55,845. So if you total it, it comes 85,629 days. Right? Now computation of tariff per day. To do this calculation, desired revenue totally. This is, we have done 8 crore 56 lakh 29,000, and rooms available is 85,629. So rent chargeable is this is rupees 1,000. So double room rent will be 1.6 time of 1,000, that is rupees 1,600, and tariff per day of single room is 100 by 80 into 1,000, which works out to 1,250 rupees, and tariff for double room on the same principle, it is 100 by 80 into this 1,600, which is rupees 2,000. So friends, what we have calculated? We have calculated double room rent, which is 1.6 time of the 1,000. How we have got 1,000? The revenue desired is 8 crore 56 lakh 29,000. Rooms were available 85,629. So when we divided, we got it at rupees 1,000. Now tariff per day for single room is 100 by 80 for 1,000 rupees, and for double room it is at the rate of 1,600. So we have got it rupees 1,250 and rupees 2,000 respectively. Now the second part of the question says, to cover the loss in discount, how much the occupancy should change. Now, what is the number of single room to be reserved? It is 12 rooms to be reserved. Occupancy days will be 12 rooms into 365 days into 85%. So 3723. Discount you have to give to your valued customer. So discount you give on 1,000 rupees at the rate of 10%. This works out 100. Total revenue lost in discount. So the total revenue lost is the multiplication of this 372300, 3,72,300 So contribution per day on single room is rupees 1000 minus 300, which is rupees 700. So increase in occupancy days for single room will be 3,72,300 divided by 700, which means 532 days approx. Days has to be complete, so you round it to the higher figure. So these many number of days, which is 532 days, is required to cover for loss of discount to the valued customer. So friend, we have finished decision number 20. I hope you have gone through a very good experience of doing the 20 decisions, decision 1 to 20. There can be many more decisions beyond it, but from examination purpose, based on the examination trend, we have covered almost all type of decisions which examiner can ask or has asked in the previous examination. I hope you must have found this learning useful. You have lot of questions given in the practice question. Please do that. Also perform the objective question given in your chapter end. Please go through the faculty note, read it, try to understand the concept on the basis of which we have done the solution, and please practice questions without seeing the answers. I hope this will make you a better person to face the exam comfortably. The last aspect of this chapter number 8 is cost and cost analysis. We will be discussing various type of costs, and we will be doing important cost from the exam angle, which is relevant cost and sunk cost, along with opportunity cost element involved into it.